today we have the pleasure once again to be joined by Jorge Ganoza. He's the CEO of Fortuna Silver. They are a growing mid-tier, intermediate gold and silver producer, currently with operating mines in Peru, Mexico, Argentina, and soon to be 2 operating mines in West Africa. Jorge, thanks for joining us this morning.
Morning, Ron, and a pleasure to be here again.
Yep, nice to see you. So I was thinking, so I was preparing for our meeting last night, that last time we talked was probably early November timeframe. We had a gold price of about $16.75 per ounce and a silver price, I don't know, $18, $19 an ounce. Things have changed a bit in the last few months. Any thoughts on the metals prices, and is it a little more fun to be managing a gold and silver mining company when the prices are doing a little better?
Oh yeah, absolutely. You know, I always say we're long all the time as a miner, right? Investors have the luxury of timing when they come in and when they go out. But we who have to operate assets throughout the precious metals price cycle, you know, we prepare for the difficult days of lower prices, which they come, and we prepare to harvest, you know, at times like this. The global gold supply, according to the World Gold Council, the global mine gold supply is produced at an all-in sustaining cost of slightly around $1,300, slightly below $1,300 as of the end of Q3 of last year. Probably today is more closer to $1,300. So, you know, seeing gold at 1900, closing a week above 1900, or several days, more than a week now, at above 1900. And I don't look at short-term charts that much, but I'm sure that all those technical analysts and chartists are happy with the way those charts are looking today. So yeah, absolutely, we work for this and you know, try to capture the benefit of those higher prices. Absolutely.
Your job is to focus on growing the business, focus on operating the business, and when the good times come, harvest the rewards.
As I see, my job is to provide optionality to the investor, right? We know that mining equities provide high leverage to metal prices. When prices go up for the underlying commodities, mining equities shoot up. If prices come down, also mining equities come down even more. Sure. But if your view is that, you know, there is support for higher prices and you want to expose yourself to that, my job is to provide a company that, you know, if in the meantime we're going to be exposed to violent swings while the thesis proves right, you want to make sure that your the company you invested in remains sound and can thrive in any environment, right? And that is my job, right? To provide that optionality to the investor. We all think gold will go up, silver will go up, but in the meantime, if we have to tolerate some lower prices, like, you know, you want to make sure that the mining company you invested on is doing well at any price, right? And that's my job.
And is in good, solid financial shape. Is, you know, not leveraged, over leveraged, or
a conservative fortress type balance sheet. You know, prudent management of, you know, we do not have pricing power in this business, right? It's a commodity we mine. So we have to be conservative. We have to be careful stewards of capital. Absolutely.
Yeah, you know, I heard it. It's interesting you say that. I heard a few years back. I heard another CEO once say that an interesting fact about the mining business is you don't necessarily have a customer that, I mean, that your product, the silver and gold, is sold on a market, so you don't have to worry a lot about customer service per se. However, the downside to that is that you're forced to live with whatever the price is in the market.
It's a commodity now. With times
Yep.
changing, there are certain factors that start to help differentiate ourselves.
Sure.
For example, our approach to sustainability,
Right.
no, environmental and social governance. But at the end of the day, you know, those are parts of a business, but the underlying commodity, we have no pricing power, right? So
Right.
no way to differentiate or gold. Today, I think, you know, around the world, currently there are several initiatives to try to achieve some level of differentiation.
Sure.
Based on ESG criteria.
Right. Right.
But you know,
Yeah.
what I try to focus is on what I control, which are
Yeah.
my costs and the type of assets we get involved with, right?
Yeah. Right. Yeah, you can always sell all of your product, but you don't get to necessarily decide what the price is in the mining business, right?
Yeah. So you know, the debate and the discussion on where prices are going and is important, is relevant, but you know, I see a lot of my peer CEOs in the mining industry spending enormous amount of time in that debate. I engage in that debate, but I try to spend more of my time on the things I can control.
Yeah, no, that makes
price of gold will be what price will gold is.
Right. You'll throw in your 2 cents on the price of gold, but the important thing is to focus on building new mines.
It's never wise to ask a mining CEO what the price of his commodity should be.
Right. Or Ron from Ron's Basement.
You know, you have a different perspective because you don't have to run a mine, you know,
right.
and again, you can time in and out your investment decisions and your advice, but we have to run the assets every day. So I always caution a bit against asking a mining CEO about the price of gold.
Right. I wonder what the answer will be. You know, you touched on ESG. I read something interesting, and maybe you can add some comments to this regarding the mine in Mexico. That it actually is and correct me if I'm wrong on this, please, but it's a zero discharge mine. I was reading about kind of the environmental components of that mine, and that like how its footprint essentially puts out like net zero discharge, and that you had for water purposes, is it rainwater collection, and there's actually a sewage plant that you're now using.
You know, I'll tell you. I think it's worth we take a few minutes, and I'll tell you a short story about that mine. Yeah. When we first arrived in Oaxaca, which is the southern state in Mexico where that mine is located, this is back in late 2005, early 2006. Mm-hmm. And by 2010, we had already done our exploration, developed a resource, and we're thinking about building a mine, right? 2009, 2010. And we identified 3 concerns from the community in the area. Oaxaca, although Mexico is a country with a long and proud mining tradition, southern Mexico does not have that mining tradition that Mexico enjoys in the north and the central part of the country. Okay. So mining was kind of a new thing in the state of Oaxaca. So we identified 3 concerns from our neighbors and stakeholders around. One was that we would compete with them for water. Second was that we would be doing a large open pit, no, disturb a lot of land.
Right.
And third was the use of cyanide to recover gold and silver, right? So we identified those three concerns early on. So we said, well, if we want to socialize the development of this mine, we need to tackle this head on. So at this mine, at the San Jose mine, which has been operating since 2011, so over a decade now, one, we do not use cyanide. We use a process called flotation, which is, you know, a very standard metallurgical process. If we would use cyanide, I think we could recover, let's say, 95% of the gold, between 95 and 97% of the gold and silver. By using, by using cyanide, we could recover 95, 97%. By using flotation, we recover 92%. So we left 5 recovery points because going to the more friendly metallurgical process, which does not require the use of cyanide, right? So that was one measure we took. The second was with respect to the open pit. The San Jose mine could have been mined through open pit methods in the initial years. And we decided not to do that, to keep a small footprint for the mine and develop everything underground. So the mine has a very small footprint,
right?
Okay. And last but not least was competition for water. That part of the Oaxaca Central Valley is under water stress. The aquifer is quite poor. So we knew we couldn't just drill boreholes and draw water from the aquifer, because the aquifer is just not very poor. It's a poor aquifer, not a lot of water, and we would be in competition with our neighbors. So we came up with a very clever project that I'm particularly extremely proud of, and when I say to my team, we never speak enough about it. We made an agreement with a nearby town, 20,000 people in the town, which is located 13 kilometers away, this town. And the town had an abandoned sewage plant. So all the raw sewage from this town was just going straight to the river, the Atoyac River. All the sewage from that large town, untreated, raw, into the open environment. So we went to the community and said, hey, listen, if you allow us, we will invest in the plant, we will bring it up to modern standards, and we will operate it at our own cost in exchange for the water,
right?
After the treatment of the sewage.
After
so we will treat the sewage, and then that treated sewage, we will pump it to our mine, and that's the water we will use.
Right.
So the source for water for our mine is sewage. It's treated sewage water.
Which previously had been going directly into a river.
Directly into a river, raw sewage being dumped into a river from a 20,000 people town.
Right.
Now we revamped it. This was done back in 2010. We revamped the sewage plant. It's a modern sewage plant now. We operate it at our own cost, and we pump that treated sewage water 13 kilometers to our mine. And that is our makeup water. And the mine does not discharge any water, any effluents into the environment. And additional to that, in 2016, we implemented something that's called filtered tailings, where we extract water from the tailings and place the dry tailings on a it's called a dry stack.
Okay.
A stockpile for those dry tailings, which is, let's call it, the gold standard in tailings management. So this is a mine that's quite friendly in every way to the environment and the nearby communities. We've been very sensible since day one to the needs and concerns of our neighbors, and we're very proud of that.
Yeah, that's interesting, and it's primarily a silver mine, correct?
It's primarily a silver mine, and we produce there about 5 million ounces, 5.5 million ounces of silver, plus some 35,000 ounces of gold these days.
Okay. Yeah, and speaking of that, would you touch on the recently announced 2022 production numbers? Sounds like the company had a busy 2022 and was able to meet the production guidance for the year. Any comments on how things went during 2022?
Yes, in 2022, we had 4 mines contributing to our production. So our San Jose mine in Mexico, our Cayoma mine in Peru, and our Lindero mine in Argentina on the LATAM side. And on the West African side of our business, our Yaramoko mine in Burkina Faso also had some good contribution. So on a global basis, our consolidated production was around 260,000 ounces of gold for the year. That's up 25% from what we produced in gold for 2021. Our silver production was close to 7 million ounces, 6.9 million ounces of silver. And then we had some byproduct lead and zinc that come out of our Peruvian mine. But so if I do some alchemy and convert everything to a gold equivalent,
right,
we produced 401,000 ounces of gold equivalents in 2022. For 2023, we see continued growth. This year, we will start getting contribution from our newest mine and really a flagship asset for the company, which is our Séguéla project, a new mine we're building in the Ivory Coast in West Africa. So for 2023, we have provided guidance already, and we are expecting on a gold equivalent basis around 440,000 ounces of gold. That will be a 15% increase, no?
Yeah, and that can be exciting for a gold mining company that's increasing production in an environment where we have higher gold prices. Could potentially generate some significant increased cash flow for the company, I imagine.
Yes, and it's not only growth, and I go back to the start of our conversation on what is our job as stewards of a mining company, and equally as important as the growth in gold at a time like this is the cost at which we can produce that gold. Yeah. Today, or as of the end of 2022, our consolidated all-in sustaining cost hovers around $1,300 per ounce. No, that will be all-in sustaining gold equivalent, right? $1,300. So we are right in the median at the 50% line with respect to where the cost is for global mine supply. Mm-hmm. The new mine we're bringing into production, Séguéla, which starts producing gold in the second half of the year, we expect May, June, first gold, will be a significant producer for many years to come because we have 10 years of reserves at that mine and growing. But more importantly, it produces gold. It will produce gold at an all-in sustaining cost of under $1,000 per ounce. That will be our lowest cost mine coming into production this year, right?
And I think it's worth pointing out that that construction project has come along very well, basically on budget, as far as I've been able to discern through all this. And in that West Africa is an exciting place to be mining on many levels right now, becoming a favorable place to be opening a mine. When I dig into the Seguela project, you know, in particular, and maybe you can touch on this, the exploration potential in the package, the land package you have. I read some recent drill results from some new targets, I think Barana and Badiar. I saw, please, again, correct me if I'm wrong, but 11.5 grams per ton at Badiar over 15 meters in one of your drill holes. I saw Sunbird, one of your, you just released a maiden resource on that one. Some more drill hole, good positive drill holes that kind of provided some continuity between. You want to talk about the I know it's a blue sky discussion, but the opportunity there.
You know, or expansion into West Africa, as you know, Ron, we did that in mid-2021, was controversial with many investors. No, I got a lot of grief from some because why were we going to West Africa, right? We were a Latin American centric company expanding into West Africa. So that threw some investors off, and it was controversial, or stock suffered, you know, it came down. Oh, yeah. My view was always that was short-term pain for long-term gain, no? Yeah. West Africa is a great place for mining business, no? You know, mining has always been a frontier business, has always been. And with respect to going to West Africa, well, you know, we'll go where the gold is, where we are well received. And even though to some West Africa might sound like remote and a bit of an unknown, it's a well-established mining jurisdiction, well-established, right? So we have been able, thanks to that, to advance our construction on time, on budget, even in a most challenging construction environment, not just for mining, but for anything, right? Escalating costs due to inflation and strain on supply chain, all of these things that have derailed projects across industries for the last years. We've been able to, you know, really shelter ourselves from that. And there is no magic here. It's just good, sound planning, a very competent team, experienced in the region, no? And a lot of very seasoned service providers in the area, right? So I attribute the success of that construction, which by now is over 85% complete, on time, on budget, as you pointed out, Ron. I attribute it to good planning. You know, we are an experienced mining company. We have now built, you know, collectively as a company, this is our 5th mine. And individually, we'll have a few more mines than that under our belt. So all that collective experience has been put to work here. We have a good team. So good planning, a good team with experience in the area, and then a place where you find seasoned service providers and support. A construction is something complex here. In mining, it's in a remote area, you know, and we benefit from the fact that in West Africa, we find, you know, there have been so many mines built over the recent years that all of that pool of knowledge is available for the next one as well.
That's right there. Yeah, I just thought of something as you were talking. You built a mine in Mexico, you built a big mine in Argentina, and now you're wrapping up. So far, so good, building a big mine. You've built 3 big mines. Is it harder to build a mine or to do the mining? I know you've harvested a lot of value from building mines. I mean, because you know, a lot of companies will just buy existing mines, but you take on the challenge of building the mines. I guess the second part of my question is, do you feel like you're able to harvest value for shareholders by actually taking on that monumental challenge of building these mines?
Yes. There is nothing more energizing to a mining organization like building a new mine, right?
Right. Yeah.
But that's just energy and
Sure.
a bit of adrenaline coming
Right.
in around that decision, the work, and everything.
Yeah.
But how do we create value for shareholders? It's not by reading a technical report.
Right.
Because anybody can read a technical report and do a financial model based on the published reserves, resources, and whatnot. So, the value is when we can come in earlier and see things that are beyond what's in a technical report. For example, exploration potential.
Right.
Or opportunities to do things different. And so we are not only deploying our capital towards building a mine, but deploying our knowledge. And that's where we add value.
Yeah.
And that knowledge is through our view on potential for exploration, or view that, through some logic, we can capture opportunities that lead to improvements to what's in a technical report, if the case may be, right? Because you don't need a geologist or a mining engineer to value something that's in a technical report. In a 43-101, those are the
Right.
technical instruments that we commonly use and everybody publishes for their projects and mines, right? But you don't need a mining engineer for that or a geologist. It's in a technical report. But we add value coming in earlier and looking beyond what's there. That's when we add value. So that's what leads us to usually try to come in earlier. For example, with the case of Séguéla, there was already a feasibility study, but we had the feasibility stands. We have not made many changes to the original feasibility study. But we had a very strong view that the exploration potential of that property was not being adequately captured in the technical report, that there was far more. And there is a risk associated with that as well, of course, right?
Yeah.
And we are, as you pointed out, mentioning the results on the new prospects we are targeting and Sunbird growing. We are materializing that view and adding value to our shareholders through the drill bit. Right.
So what's interesting that I heard you say is vision, right? And you couple the vision with the experience, which is critical to have, right? You need to know mining's a very difficult business. Building a mine's a very difficult business. But if you go in and you see something, or you believe there's a high likelihood that there's more potential there, you have that vision. And that's based on experience, right? Not like a guy like me going there and having a vision, but somebody who's got decades of experience in the team that you have, and then you deliver. And your company and you at the top have a reputation. That's your reputation, is that you're not perfect, but you consistently deliver. And nobody's perfect, right? I'm not. You can ask my wife. I'm not perfect either, but you consistently deliver on what you say you're going to do. And I guess my last question for you, Jorge, would be this. I know you're a busy guy. You've got a big company you're running. How many employees total at Fortuna?
Fortuna today is a workforce of around 5,000 strong.
Right. So you're busy, right? You got a lot of responsibilities. What's on the top of your mind? I know you have multiple projects, but is there anything that is, right now that's on top of your mind in terms of, goals that you're trying to achieve and, key objectives for the coming year?
Yes, of course, we work under the framework of a strategic plan. With respect to my day-to-day headaches, I'm not going to mention those because every day they come through my desk. We operate in 5 different countries, each one with its own challenges. So you cannot imagine the amount of problems that come through my desk. I'm not gonna, but as I say, those are management problems, right?
Right.
But from more the strategic point of view, what's on my head? We did a significant acquisition back in 2021 when we acquired Roxgold, which was our expansion into West Africa. So my focus is capturing that value for the benefit of our shareholders, right? And how we do that is through advancing Séguéla, bringing it into production. Séguéla will be a flagship asset for the company. It is a flagship asset for the company. Low cost operation with meaningful production, long life of reserves, and growing. So it's bringing Séguéla into production successfully, which we are achieving, and then harvesting all of that exploration that remains in West Africa for us, right? So we're still committed to Latin America, but we're having a bit of a stronger push in West Africa right now.
Yeah, that's right there in the next 6 months that you can.
What you should follow for milestones for us throughout the year is basically how we get closer and closer and continue de-risking further the Séguéla start of production. So we're gonna start mining, breaking ground and moving dirt by February. We should start commissioning activities in the plant by April, and we expect first gold in May, June. So that's exciting. And I think that will set the company, hopefully, for a re-rating as well, right? Because I think today, many analysts and investors, everybody's been a bit risk prone, right? And construction is always risky. So as we get closer and deliver the gold, in the good old days, when you're in a bull market, in a well-established bull market, people would come in and bet on the construction or whatever early on. Now they want to see 2 quarters of production before they come in, right?
Right.
Those things change, right? If we see gold coming up and moving up and moving up, everybody will just want to take part of that, take the risk, take part of the construction risk, right? But right now, I don't think, even though we are happy with the way gold has moved, it's not, it doesn't have the strength that we have seen yet in other bull markets, right? So, but it's funny because as prices go up, investors become more audacious, right? And they take on more of the mining risk or construction risk or exploration risk and come in earlier. I don't see that yet, no? We see signs, but nothing well established.
I would agree with you. I think the sentiment, or however you want to say, in the mining sector, when it comes to the mining equities, it's improved, but it certainly has a long runway ahead of it. And it's interesting. I think you touched on this in your comment that a lot of investors would rather, they become more confident and they would rather buy a lot more when the price is much higher than when the price is beat down. They go to the grocery store to buy tuna fish. If it's on sale, they'll buy 2 cans, right? But if it's a mining stock that's on sale, they'd rather buy it when it costs more. So, hey.
Yeah, everybody manages the risk according to their own views of the world. But our job is just to continue focused on delivery, right? And some will come early, some will come later, but I believe that everybody will understand the value proposition at some point, right?
That's right. That's right. That's right. Well, hey, really appreciate your time, Jorge. Is there anything that I missed? Anything else you think you want to mention to my audience before we wrap up?
No. Let me wish you a great start of an exciting 2023 to everybody.
Yeah, we're really looking forward to, and in full disclosure, I am what to me is a significant stockholder in Fortuna Silver. So I'm really looking forward to this year. Of course, at all the operations, but the Seguela mine, I've been following that. I've held the stock from the days of the Roxgold acquisition and merger, so it'll be rewarding to see that the mine come online and some benefit be harvested from that. I just want to mention to my audience, they can go to your website. Is it fortunasilver.com? Is that correct?
Yes, and we keep a very updated construction gallery.
Yes.
For Seguela, and you can follow the progress there as well.
Wow. Again, Jorge, we really appreciate your time. It's been great talking to you. Thank you so much. I appreciate it. And you shared some great information, but also some great insight. And I hope to be talking to you again soon here in a few months.
Always a pleasure.
All right. Thanks, Jorge.
Take care.